Hello, I'm Tony Hay, co-founder of Responsible Investor. Welcome to this ESG Leaders interview with Alexandra Mihalescu. Alex is Executive Vice President of Sales and Marketing at RepRisk, and we'll be focusing on ESG integration in private markets. Alex, how are you today?
I'm doing well. It's great to be with you, Tony.
Excellent. Welcome to this. So we're going to jump straight in. ESG in private markets. What's being done well? And where are the growth opportunities?
Well, growth in private equity has been tremendous, with assets doubling in size over the past 10 years. I read a report recently that said that by 2025, the assets will be close to 6 trillion. So in the last few years, there's been a lot happening around ESG when it comes to the private market space, but there's still a long way to go. To give you an example, only about 10% or so of global private equity firms, so 8,000 or so firms, are signatories to the UNPRI. And because private market firms are so close to their acquisitions, they put a great deal of time and money and effort into due diligence. Maybe they think in some cases that there's can't be anything that they've possibly overlooked when it comes to risks. But due diligence primarily looks at data coming from the company itself. And in most cases, this is done by checklists to assess ESG performance. And in our experience, it's critical to go beyond using static, maybe an outdated checklist approach, especially when it comes to ESG risks.
Okay, so if company data can be unreliable or it can be short, how do you look at the company's ESG risk level? What are the tools?
Yeah, and we've all heard the statistics and the surveys that show that data is often cited by investors as the biggest barrier for ESG integration or better ESG integration. And what you hear from firms in the private market space in particular is the lack of ESG data on unlisted companies. So the coverage issue. In many cases, that can be because they just don't know about RepRisk. We've been the only ESG data provider to systematically cover private companies, and we've been doing that since day one. Our data set today has close to 200,000 companies, so ESG risk profiles on close to 200,000 companies, and 85% of those companies are not non-listed companies. And these companies come from developed markets, from emerging markets, and from frontier markets. And we work with close to 500 clients, and many of the top private equity firms and private debt firms are included in that client list, and they've trusted our data for years. And what's exciting recently is that we started partnering with BlackRock eFront to provide our risk metrics for private companies embedded into their Insight platform to better support GPs and LPs on ESG integration.
Okay, very good. I think I saw recently that you're publishing your algorithms and methodology to the internet, making them public. What's behind that?
So I think it's just time, and it was the right thing to do. There's been so much talk the last few years about ESG standardization and ESG regulation, and all the surveys show, again, as I said, like the data is the biggest barrier, and the market needs clarity and comparability. Investors need confidence in the data that they're going to use, that they're embedding into these products that have grown tremendously over the last 2 years, right? The number of assets that are labeled with ESG. So I think we saw it as the part that we can play as a data provider to be transparent with our methodology, with the algorithms behind the metrics, and allow the world to know what is our approach, how are we actually doing it, and what is the use case that we're trying to support our clients are. So we have nothing to hide, and we think that we want to encourage the whole market to make that step as well.
So do you welcome the EU saying that it's going to regulate data providers?
Yeah, I do think it's just part of the natural progression of where ESG is going as it moves towards maturity and as it's become mainstream. So there's a lot of regulation that's been discussed for asset managers, asset owners, and data providers are the next in that line. So with our publication of our methodology and our algorithms on our website, I think we're ready for that when it does come. And again, we fully support the fact that clarity and transparency are much needed in the market.
Very good. So Alex, at this point, I think you're going to share some slides.
Great. So first, let me just say, I'm going to talk about our methodology, but one big news from our side the last week was that we just published our methodology for the whole world to read on our website. So every step in our research process, even the algorithms behind our risk metrics, are now fully transparent and available on our website. So what I'm going to talk about today are just some of the key points, the highlights, to kind of share our approach, but everyone can dig in a little bit further on our website after the video.
Okay, very good.
I think one thing, let me start by saying that we like to call RepRisk use case beautifully simple. And what I mean by that is that we have just one use case. We are focused across our client base. Our clients come to us for help to systematically identify, assess, and monitor the ESG risks in their business. So when we talk about the private equity firms, we're talking about their portfolio companies primarily, but we work with a wide variety of financial institutions, but always coming back to this risk focus. So that's the first point about our research approach, is that we see ESG through a risk lens. The second key thing to mention about our approach is that we look at, we evaluate companies on ESG risks through this outside-in perspective. And what I mean by that is that rather than looking at what companies are reporting, what companies are disclosing themselves, we look exclusively at sources and stakeholders external to the company. So essentially, we're looking at what the world is saying about a company, not what a company is saying about itself. And that's important, I think, now in this time of really checking of how companies are walking their talk when it comes to human rights and labor rights and environmental degradation and climate change. And that's really the work that we provide, the data that we provide to our clients, helping assess whether companies walk that talk. We started our data set 15 years ago. We just celebrated our 15-year anniversary this year. Our data has been updated on a daily basis from day one. And the methodology that I'm describing today, and that's on our website, is a fully rules-based methodology. And that has helped a lot with creating a consistent and stable and comparable data set over time, something that in particular quant-focused clients appreciate, but also clients generally appreciate. And then the final point to mention here about our approach is that the work that we do is powered through a combination of technology with human intelligence. So we leverage AI, we leverage advanced machine learning for our work, and then we have a team of over 110 analysts and growing. And the way that we see it, we take the best of both worlds. So the technology is really key for helping us provide speed and providing the size and scale of our data set. We wouldn't be able to deliver data on close to 200,000 companies on a daily basis without leveraging technology meaningfully. But the human analyst team play a critical role as well. So what they essentially help us to do is to curate all the data that's coming in through the AI. So they're making sure that what gets into the hands of our clients is actionable and relevant. And what I mean by actionable, that it's decision useful in some way. So this combination helps ensure that RepRisk can deliver the timeliness, the coverage that investors and clients of ours expect, but by cutting through all the noise and making sure what they get is relevant to their work.
Okay, very good. So can you give us some examples of how clients put that data to use specifically?
Sure. I'll go through a couple of use cases with our clients, but I think if we look at our private markets clients generally, we're talking about three core use cases. We're talking about due diligence, so pre-acquisition, pre-financing due diligence. We're talking about post-transaction risk monitoring with those daily updates, and we're talking about company engagement, and in other cases referred to as value creation, which I'll talk a little bit more when we go into the Permira use case. So let me get started with the first example with KKR. So KKR is our first ever private equity client. They've been working with us since 2015, and they've been using our data since then as part of that due diligence process that they undergo when they're looking to acquire a company. They also spend a lot of time using the data to look at the various angles of the risk exposure. So our data also covers the sector level, the country level, We look at the NGO perspective. So they are leveraging some of these different angles in their research to get a comprehensive view of the risk exposure. And then they're seeing how companies are managing these ESG issues and how they're managing their stakeholders as well. So that's the first example with KKR. The next example I'll jump into is with Permira. So they also, like most of our clients, I mean, due diligence is where we got started. So most of our clients, or all of our clients, are using RepRisk for due diligence of some sort. But what also Permira does in this case is they're also looking at the companies with a competitive view or with a peer view. So they're looking at the companies that they want to invest in and using our data to also look at the peers of that company and to again look at the sector level. And they're using it for the ongoing monitoring. So again, the daily monitoring of their portfolios through the daily updates that RepRisk provide. One interesting thing and one really nice thing that I think Permira does is that they take ESG and they really make it a sort of cornerstone of their engagement with their portfolio companies. So what they do is they create value creation plans or 100-day plans for companies. And if there's a particular ESG risk that's flagged, they will embed that into the 100-day plan. They will engage with that portfolio company. They will even do a site visit, and they'll discuss how they can support that company on their own ESG journey. And because private equity generally has a longer term view when it comes to their investments, and ESG is inherently more long term, it's very well suited. And they both that now they see that ESG is a long term value driver, and then there's a win-win for both that private equity firm and that portfolio company at the time of exit. The next example is with Color Capital. So one of the largest players in the secondaries market. They were looking to focus on the underlying private equity managers in whose funds they invest. And like all of our clients, they're using RepRisk in the due diligence process, in the ongoing monitoring process, but they also use us to screen potentially problematic assets. We also have data on infrastructure projects and other areas, other data sets that they're using to do that screening. And they're also using RepRisk to support compliance with the UK Modern Slavery Act. So we cover many of the topics in the Modern Slavery Act in our research scope. And then finally, the last example here is another large player in the fund-of-funds space in private equity, Pantheon. We've been working with them since 2015. What they were looking for when we first got started was just simply better coverage, better analytics of their 7,000 portfolio companies. And they started to embed RepRisk into their portfolio monitoring process. And they started to see that they were identifying additional incidents. So before embedding RepRisk, they were identifying several incidents a year, but after they embedded RepRisk, that number went up tremendously. And it gave them not only, they were able to capture risks earlier in their portfolio, but it also gave them chances to engage proactively with portfolio companies and really support their goal of being an active investor. Okay. So I hope those four examples gave a little bit more color to how companies in the private market space are applying RepRisk. On our website, you can anybody can look up under news and publications, the interview series that we have, and all of the examples I gave today have specific interviews where you can dig into more details.
Very good. Okay, thank you, Alex. Perhaps stop screen sharing at this point, and we'll just go into the final question, which is saying, what's next for ESG in private markets, do you think?
Yeah, so I think private markets are quickly catching up to ESG. I think the latest example is the recent news of a group of global private equity firms led by the Carlyle Group and CalPERS in the US coming together to form the ESG Data Convergence Project. So they're going to try to advance a standardized set of ESG metrics and a mechanism to compare reporting for the private equity industry. And I think that just shows how much ESG has progressed in the last couple of years in the space. And this means maybe that private markets are looking to integrate ESG in a way that moves around or circumnavigates the growing pains experienced by private markets. So they're just catching up quickly. And they're already doing things such as linking interest rates for loans with ESG to provide more favorable rates to those who meet certain ESG criteria. So there's a lot happening in ESG generally, but the private equity space is definitely pulling their weight and moving quickly. And at RepRisk, we would love to see ESG become more embedded in the space, and we're ready to be their partner on that journey.
That's excellent. Alex, thank you very much. We're going to leave it there. That was a very good and thorough overview of what you do. I hope everybody enjoys that, and please do go to the RepRisk website if you want to see some of those case studies. Alex, thank you very much.
Thank you very much for having me, Tony.
Thank you.